Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Wednesday. Happy Hump Day. Welcome to PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with us as always. Good morning to all. We got a lot to talk about. We're talking earnings. We're talking reopening trade or maybe lack thereof. Maybe. I don't know. A warning from Southwest Airlines. The kind of warning we've been saying could happen. We didn't know if it would happen. It appears to have happened this morning. We will talk about that. Our guest today, I am very excited for Christian Fromhertz, founder of the Tribeca Trade Group at 8:35. Christian is always great with his charts and his setups and his thoughts. That'll be at 8:35. Do us all a favor and take 2 seconds out of your life and do what it says on the screen. Smash that like button. Thank you very much. Let's throw it to Joel as he shares his charts. Joel, good morning. How are we doing? Are we still at all-time highs or not quite there?
Before we do that, Spencer, we got to talk about Saturday, August 21st here. I'm starting to get excited about that. Spencer's giving me some ideas. Also, Money Mitch is going to be joining the crew there to help us moderate it. Triple D, we have a meeting at 1 o'clock today. Did you get that?
I'm bad with meetings, man.
What?
I'm the worst with meetings.
You're the worst with everything. With organization.
Mean.
I didn't even text you back. You said, "Oh, can we change it?" And I'm like, "I'm going to do it at any what." No. Anyways, we gotta have some. We might have to go from 3 hours to 30 hours to get everything in. So it's going to be an eventful Saturday. Mitch is or Spencer dropped the link in there. I'm looking forward to it. As far as I'm going to share my screen, but I'm not going to show you anything because we're stuck. We are stuck in the 44.20 handle, all-time closing high yesterday, but it was just a whimper of a high. Let me bring up the charts. We got the 38.25 midday. It looked like we were breaking out, and then, Fed speak, rates are going up in September. They want to get rid of Powell. They hit it, and then we just rallied back. But look at those ranges, consolidating near the top. You know what that means? Another breakout. We'll see what the CPI number does to the market today. Crude, it's a mover. It's down 99 cents. It's 67.30. Gold just trying to get back up to 1760, up 840 at 1740.10. Silver, that's in the green too, but in the 23 handle, that's up just a couple pennies at 23.42. Bitcoin, comfortable in the 45,000 handle, trying to get into 46, high the move at 47, we're up 440 at 45,935. We can discuss Coinbase earnings too. And Ethereum, that's going the same way. That's been a lot stronger. That's up $73 at 32.26. So I guess the story of the day, the driver of the day is going to be Southwest Airlines.
Well, let's see. Let's find out. I think it's too early to tell.
It's the driver of the pre-market.
Yes.
Because we are clearly seeing a reopening trade, which has been hot for a couple of days, come off, at least in the airlines, even the cruise lines trading down. So reopening is coming off this morning. Give us the details.
Yeah, 8K out from Southwest Airlines this morning. Here's what they said. They say July's operating sales were in line with expectations, stronger leisure passenger traffic. Okay, that sounds good. All right. Operating sales for the overall quarter, however, is down 3 to 4% or 3 to 4 points from their previous outlook. Why is that? Because in recent weeks, and I'm going to quote here, they've, quote, recently experienced a deceleration in close-in bookings and an increase in close-in trip cancellations in August 2021, which are believed to be driven by the recent rise in COVID-19 cases associated with the Delta variant. This is from Southwest Airlines. They are saying that in August, we've seen a slowdown and not just in new bookings, but an increase in cancellations. Yeah. We think it's because of the Delta variant. That's what they're saying. So remains to be seen how far across the market this news reverberates today, but it is reverberating throughout the airline sector in the reopening trade this morning.
Yeah, and this is what we talked about 2 days ago on the show. That's why I've been cautious on the reopening stocks. I talked about my friend who had a trip planned to Disney, and 4 days ago, he's like, no, not going to go down there. There's just too many cases. So, he's a huge fan. He has been pumped for the trip. Obviously we've been a year and a half where, we haven't been doing anything like that. So he was really excited and he canceled it. And that's because you see in the news, you're seeing the numbers down there and you're like, okay, there's 30% of the population that's not going to give a crap. Then there's 30% of the population that's on the fence. And then there's 30% of the population that's somewhat scared of this virus. So, I mean, if you just even lose the 30% that's scared of the virus, that's going to equal cancellations. This is exactly what LUV is saying. It's exactly what we were warning about a couple days ago. You've got to be careful here. Is it all priced in? Is the reopening problems all priced in on some of these stocks? I mean, we know they've been coming down for 2 months, some of these trades, but the recent rally in RCL from 70 to 80 is telling me maybe, it might not be priced in. The recent rally in Carnival Cruise Lines, big rally lately. It is a concern. It is a concern. It's not going away. Now, if the numbers start to come in, obviously, we get it back in check, then, this trade can come back off. LUV has sold off substantially in the last couple months. This is a Delta sell-off. Don't kid yourself. This is sold off because of Delta. So the question is, how much is priced in already? This isn't unexpected news, but it's a little bit of a, okay, this is real. We are seeing, some portion of the population that is obviously scared of this virus. So I think if you're looking at the reopenings, you got to look at the lows of the move. LUV low of the move, 47.36. I think I'd go to the more recent one, 48.50, if I was looking to buy this pullback, but I need more information. For me, I don't have a lot of reopening stocks. I need more information yet. I'm kind of interested because some of them have come down quite a bit. That makes me, want to do the little barbell thing. I'm still heavy tech. I'd love to get a few more reopening stocks in there. I did put Uber in there, which is a reopening stock, but I'm being very selective still because of all the unknowns of we don't know where this is going.
I got a trip to the Cross Wisconsin planned in a couple of weeks, and I'm not canceling that. The people that we're going to visit.
Would you go to Florida right now? Would you go on a trip to Disney World?
Well,
can we ask that in the chat?
Yeah, here, I'll drop a survey.
Would you go to Disney? Would you hop on a plane and go to Disney right now? The answer from me is an absolute no. The answer from my friend was a no. He actually canceled the trip 3 weeks out. So would you go to Disney right now? Would you go stay on and go to the Magic Kingdom?
Does it have to be Disney specifically? You're going to be Florida. Would you
Florida, like resort, where there's a lot of people, shared, obviously.
Yeah. I would say that my dad is going to Florida. It's not for vacation. He's going to see his dad, but
that's different. Like going to a public, where there's thousands of people.
It's
Blizzard, very mixed, the chat. There's some yeses and there are some nos.
Is Blizzard Beach open?
Then if it is, then Joel's in.
I gotta hit that slide. But it's another thing too, Dennis. Your friend has kids, right? That was going to go down there.
Yeah,
unvaccinated kids.
I want to take my kids to Disney too. My kids. I was telling them, we're starting to get closer. Like, when can we go to a play center? When can we go back to Disney? When can we do these things? I'm like, it's coming. I was saying that a few months ago, and now it's like, I don't know. I'm with my kids, they both have asthma. So I've got to be extra careful too. So that isn't everybody, but here's the vote so far. You want to know what the vote? 150 people just voted in the last 10 seconds on our poll.
It is
53% yes, 46% no.
It is split.
It is split. 55. So a little more leaning to yes, but you know what that means? Sure, 55% yes is great. But is that good for LUV? That's exactly showing up in the LUV numbers. Our poll that we just conducted is showing up in the LUV numbers because there's 46% of the population that says no. And there's 46% of the population. Some of those no's had tickets, and that's why they're seeing cancellations. So it's not, LUV says we think it's Delta. It's not a we think it's Delta. It is Delta. There's no doubt that they are seeing cancellations because people are worried about Delta. I'm not saying we're going back to the lockdown. I'm just saying, as stock traders and as buyers of reopening stocks, if we are potentially looking at those sectors, we have to weigh all the evidence that is out there. And the evidence right now is uncertainty. Even our poll, 51 to 49, 50-50. It's exactly 50-50 right now. 229 votes we had in 1 minute. 50-50. Half would not and half would. That's tough.
Dennis
tough.
with the play-by-play. I love it. A couple things. Well, we're looking at this. Dennis, the pre-market low, we've seen that, and it's a pretty thick stock, right? Pre-market low is 49.65. You got two lows in the same area, 48.56. Then you had the low of the move. But those are dailies. But if you look at the monthly, let's forget about the dailies here. I mean, do you think you're going to get a shot at 45 on this? 3 monthly lows in a row? Or if you're taking a poke here at 48, 48 and a half, you might have to sit it out to 45. I mean, 3 monthly lows in a row in that area. Taking out, if we take out the low from this month at 47.37. So down $1.31. That is a big move for LUV. I don't know. Dailies tell me 47 and a half. The monthlies tell me 45.
Can I say something that's slightly off topic?
So on LUV, you're looking at 45.
Yeah.
Yeah.
On the monthly. Look at the monthly.
I don't think you're going to see this. I don't know. I'm torn here. Are you going to continue to see continued selling, or is this early selling just an overreaction?
Okay, and what about the business travelers here? What's the business? It will be
that's
up.
Tough. Kevin O'Leary was on CNBC about an hour ago, and he said exactly what I think too. It's not coming back. You're not going to get back to the levels that we were at in 2019. You're going to get a lot of back, but are you getting back 100% of the business traveler coming back? Absolutely not. You're going to get probably 70% of those business travelers.
That's a generous. I'm sure the airlines.
If it's only 70, it's problems for the airlines. I'm going to tell you right now, if they lose 30% of their business travelers long term, the airlines all got trouble. So it's got to get to 70
margins
at a minimum.
You
can't start losing 30% of your business traveler and expect your stock price to be making new all-time highs.
I read an amazing stat this morning in the Wall Street Journal. This blew my mind. Okay, in Q1 of 1996, the average domestic airline ticket cost $284. That's 1996, $284. In Q1 2021, it was $260.
Now, so look, we have deflation in something. There's deflation. There's what the Fed's looking at. That's what they're looking at with their CPI data. It's airline tickets.
But on the note of the business travel, right? Like, is this really a growing industry? I mean, prices are.
It wasn't before COVID. Good point.
That's what I'm saying. Right.
Yeah.
That's what they're saying. I'm saying that they're saying it. So.
It's been tough to own. Even the airlines, we talked about this too, Joel, were the airlines doing great before COVID started? I mean, LUV was $50 back in 2016. And yeah, it went up to $65 in 2018. But it was basically $50 before this thing started. It's $50 here today. The airlines have gone basically nowhere in 6 or 7 years. There's a reason for that. There's no growth. And you know what? They start losing 30% of their business travelers if they start, just getting spooked. Obviously, the traveler that's going on vacations, the retail has to pick it up. They have to pick up the slack, and I think you could see that in the short term. If this Delta variant wouldn't have happened, I think you would have saw a better reopening. But now that Delta's happened, you've spooked people. You've spooked some people. That's all that matters. That's what you got to understand. With business, with money, it's not about like a business loses 20% of its sales is a disaster. We complain about sales going down 3%. You think about stocks getting hit. Losing 5, 10, 20% is crushed. So if you have half the people spooked, go to Florida. There's problems for the airlines in the immediate term. They need to solve the Delta problem. That's what needs to happen. That goes for the cruise lines, goes for the airlines, that goes for the casinos. There's a reason Wynn and Las Vegas Sands have been hammered. There's a reason, and it's Delta. So and people don't want me to talk about Delta, but I mean, this is what you're
reality.
Making, if you're a trader, you make money by figuring this stuff out and figuring it out ahead of time. And if you were thinking that Delta might actually slow down the reopening trade a month and a half ago, you got paid for that because it did. Money flew into tech and has come clearly out of reopening. Now, we don't know when that trade reverses. I do believe it's going to reverse at some point in time, but watch the data. Watch the cases. We start to get it back into control. You start thinking about buying these reopening stocks.
Again, remains to be seen how far this headline reverberates today. So far today, it's hitting the airline industry, it's hitting your reopening, but but we don't know if come 10, 11, 12 o'clock today, like, will the market shrug this off or not? It remains to be seen. On the other side of this coin, about the Delta variant, rising and all that stuff, Dr. Gottlieb did say yesterday he thinks, and this is a quote from him, he thinks we're in like the final wave of this pandemic.
I hope he's right.
He thinks this is it. He doesn't think it's going to get much.
That was something that I was discussing with Lisa too. And
Yeah.
I'm like, if it's, because there's just waves,
Right.
and there's certain waves, and the areas that are getting hit now, and are some of the areas that weren't hit hard, at the beginning. So it's just waves. I tell you, I keep a close eye on the hospital beds here at all the Detroit hospitals.
Yeah.
And we're and people on ventilators.
Sure.
I have Lisa check it every day, and we're doing okay. I mean, we're doing good. I mean, there's nothing like, so and when I look at that, and then I look, I don't want to be, selfish or anything, but I look at Michigan. Michigan was hit hard early, took certain precautions, and now, that's it. So right now, I'll tell you, in Mr. Market, and I know we look at all different kind of indexes and everything. Right now, the market's giving the middle finger to the Delta variant, as far as I can, in certain stocks. I know, Dennis, the reopening stocks are getting hit.
That's not the case at all. It's been very clear that Delta has been driving the bus. Why do you think all these tech stocks have had the rip and rallies that they did? Because that's what worked in 2020. We went right back to the Delta trade of 2020. We sold everything, from all those reopening stocks, and we bought up all the tech stocks. That's what happened in the last month and a half. We went to the 2020 playbook, and they bought all those stocks. Besides the video gamers,
but over the last month, that hasn't really been the case. I mean,
okay, well, bring up the chart of American Airlines.
Okay,
$26 in June, $20 today.
Yeah, okay.
Bring up the chart of Carnival Cruise
Bring up the chart of Zoom. It's flat in the last month.
Yeah, but if you go back to June, 320, so it's come down the last 2 days. But because, again, this is reopening, driving the bus. What happened in the last 2 days?
No, in the last month, Zoom was over 400 a month ago.
I'm saying it started in June, 320. It started at the beginning of June, this Delta. When we started hearing, we've been talking about this for 2 months. It's not 1 month. It started 2 months ago. The Zoom bottom, 320, coincides nicely with the Carnival Cruise Line's top. It's almost to the date. First week of June. Look at the first week of June and look at the separation between CCL and Zoom. Look at what happened. You had the run. So, yeah. It's very clear this happened the first week of June.
In the reopening stocks, yeah, but not like across the board, not in tech, for example. Here's
my question now, Dennis.
So go to the beginning of June. Where was the NASDAQ?
Yeah, but this is what I'm worried about.
We're up 10% in the last 2 months in tech stocks.
In five stocks. That's what you mean.
But there's a reason those stocks work. Those stocks got bid in 2020 as well. I'm just giving you the evidence. It's not, it's not rocket science. This trade didn't occur at the beginning of June. Hindsight Capital's 2020. We can always analyze the data and say we had a rip and rally in tech in June. We had a sell-off in all the reopening stocks in June. Why? Delta. I mean, it's obvious. It's obvious that happened. Peloton back in the beginning of June, 102, 104, and they've come off. In the last couple of days, this trade has started to reverse. So is this now the time to reload? So let's forget about that. We don't get paid for what's happened in the past. We get paid for predicting what's going to happen in the future.
Sure.
So the question of the matter is, does this crowded tech trade, which it is crowded right now, continue to get more crowded? Or is there that potential to buy the dip on some of these reopening plays that Delta is eventually going to get back in check? I'm kind of in the latter camp. So, people who are saying rah, rah, Delta, I mean, that I'm rah, rah, Delta. I'm looking to buy some of these reopening plays. I've already been paid to be long tech. I was loaded. I sold. The only reopening stock I kept was Las Vegas Sands. So I already got paid for that. So now I'm trying to figure out, how do I get paid in the next 3 to 4 weeks? Do I want to be long those reopening stocks, or do I want to be long tech stocks? I don't know. I think I want to be more balanced. It's going to be a great question for Christian Fromhertz in 15 minutes, too, because he looks at the data as well. We're going to have him on. But I don't know. What are your guys' thoughts? Like, do we use this pullback this morning in some of the reopening plays, which you're clearly seeing them pull back off the LUV data to maybe start to get some exposure there? I'm not sure I know the answer. I'm kind of on the fence.
The tech is interesting too, and I just pulled up Apple here because it hit that 150. We know that there's just a roadblock there with size, and it won't go down. It really won't go down. It's down a little bit today, but it's just what a trading range. And I just don't. This is what I think is developing in Apple here. Did you see that consolidation we had from the middle of May to the middle of June? That was very unusual. And then we finally broke out in June of that long consolidation.
Yeah.
Here you got the consolidation, but it's leading on the lower end of it. So earnings couldn't take it through it. 145 to 150. I mean, this is symptomatic of the market too, but I'm keeping a close eye on Apple. They did not respect these stocks after earnings, which was a little bit disappointing. Microsoft had that one day when it bolted through 290 and then they just slapped people around. It went to 291.55 and then the sellers came in again. Amazon, it had the report. And oh man, it's not about. I mean, you got a reference point with the low of the move, but you can't say it's roaring out of there. Google, this is all after. Well, Google's been acting the strongest. I got a good stat for you. I actually heard on CNBC. What percentage of the population from 15 to 25 looks at YouTube? I think they said on a daily basis.
Oh, I would probably guess 85%.
Okay.
I think that's high, but it's going to be a high number.
77.
Oh,
yeah,
wow.
That's crazy.
Wow.
Yeah.
That's, yeah.
Is that, yeah.
YouTube's just powerful. Yeah. My kids they love that YouTube Kids. We limit the screen time, but if they had a choice, they would be on that thing 24 hours a day, 7 days a week. They wouldn't even eat on the YouTube Kids if they had their own.
They wouldn't eat, you said?
Yeah, they would just stay on YouTube Kids. Oh yeah, they choose YouTube Kids over breakfast for the 4-year-old and 6-year-old. Like a lot of times when I'm doing my research in the morning, Spencer was up at 6 o'clock this morning. I was like, I can't parent right now. At 6 a.m. It's too early. I throw them on. We let YouTube Kids parent for the first 20 minutes until I get my wits about me.
Yeah.
But
okay, wait. Can we talk about some earnings? Can we talk about?
Yeah, let's go.
Right.
Yeah, we got to move on. We got to catch up here.
Fubo or Coinbase? Pick one.
Do Coinbase. It's more relevant to the overall market, really.
Wow, that's not just mean Fubo.
It's crypto. It runs crypto market.
All right, fair enough. Anyway, the Coinbase. This is so they're both interesting reports. So Coinbase's numbers were good, and so their EPS beat, their sales beat. But here's what I think is going on here, and they actually said this in the report. They did lower they warned that their Q3 trading volume would be lower than their Q2 trading volume. Here's what I think is going on here. They don't break it down by month. They don't tell you how their activity, changed on the platform during the quarter. They just do quarter over quarter, year over year. Benzinga knows because Benzinga has businesses that are tied to this business, to the business that Coinbase is in, that trading volume and account creation has declined this summer. May was a good month. June, I believe, was okay. July was slower. August is still early, but August is slower, right? This summer, there's been a massive slowdown in trading activity and account creation pretty much across the board. And I saw some stats about this like a month ago, too. I think maybe it was June was slower. July was slower than that. August is so far, I guess, slower than that. Coinbase is lowering the bar for themselves going forward. It was a good quarter. I suspect that the most of that strength came from the early part of the quarter, not the middle and the end part of the quarter. But regardless, it was an okay quarter, and I think you're seeing this reflected in the stock this morning because if the quarter was so great, why isn't Coinbase trading higher more? Because I think people know that this summer has been slow. Coinbase basically said as much, right? They said it's been a slow summer. They're already warning that their growth is going to slow for the current quarter when they report next time around. So I think the market understands this. So last quarter numbers great, but going forward, slow down.
Easy chart for me, and then Triple D, I'll let you do your fundamental analysis. Sure. Throw out the high and throw out the low for right now on that first part, right? But that 280, that's all I'm going to give you. I mean, boom, you hit 280. It's probably a little bit. I'll give you the exact numbers the last couple days. Right here, let's see. What is 280, 243, 281.50. We're splitting hairs here. 280 here. To me, this gets 280. You hold the bid at 280. Go take out the pre-market high. You can have a long-term target here of 320. That's halfway back of the IPO move. But that 280, that's a roadblock for today. Dennis, you can talk the technicals or fundamentals on it.
It's a big day. It's an important day for that and for Robinhood as well, because I think we are going to start to see Robinhood and Coinbase track each other to a certain extent. I mean, obviously Robinhood has equities as well, but there's a big crypto portion of this as well too. So I would not be surprised if people start pairing those two stocks up together. So it's a very big, important day for Coinbase here. The dip was bought. So there was a dip all night and it has been bought. So that's the good news. The bad news is you do have a big overhead resistance there, 282. You get up over that, then you start thinking about 300. But it's a very, very important day for Coinbase. This is going to be like a determinant. So I would say use yesterday's range, 264 on the downside, 281 on the upside. Maybe you stay range bound, but you're towards the upper end of that range right now. Can it take it out? That's the question. We're gonna get a CPI number here in 3 minutes.
Yeah. But real quick on Hood.
I'm going wide on this one.
On Robinhood, Coinbase's report actually made me a little bit less enthusiastic about Robinhood because, Robinhood said in their S1 how amazing their growth was year over year. A lot of it was driven by crypto. But what the Coinbase report says is that's got nothing to do with Robinhood. That was just a rising tide lifted all the ships here because Coinbase's year-over-year increases were insane in terms of retail transaction revenue, institutional transaction revenue. Year-over-year growth was just monstrous for Coinbase. So I think it was more of a case of a rising tide lifting all the ships. It was nothing really to do with Coinbase or Robinhood. It was the entire space, and we're definitely seeing a slowdown. I'm telling you, we're seeing a slowdown in the last 2-3 months. So those that quarter is probably not going to be repeated. I mean, and we are going to see Coinbase's numbers come in because of competition. I mean, you're going to start to see obviously a lot of other exchanges, crypto exchanges. So that's why I've always been skeptical of Coinbase, but I've liked it for a while. Like the 220 to 230 was such good support. I did play it once. I wish I would have played it and held on to it. I think I can't remember the trade, but I think I took it from like 230 up to 250 once, but I wish I would have rebought it 5 days ago when it got back down there. That's always my problem.
Wow,
I scalp well, I get out well, but I don't rebuy. And then you can look back and you look at the stock, you're like, why didn't I rebuy that? So I'm gonna throw it to you guys for a couple minutes here.
I'm gonna go wide. I just want to reiterate something that Dennis said. He said it's an important day for Coinbase, and yesterday was an important day for AMC. And I just, the pre-market action that they had it pumped up there, but boy, oh boy, you failed right at the pre-market area, and you down trading up a couple pennies today. Man, there was your potential catalyst, right? The new, the earnings report, and they liked it, and then it turned. So, same thing. You don't have to trade every stock every day. You can see how things react to the earnings reports. But I feel the very important day coming up for Coinbase. So we got a minute. Everyone's looking for a hot number.
Yeah.
I will go to shorter term chart just for the thrill. Someone asked me. I usually don't keep anything up shorter than a 15-minute. I do look at the first couple minutes pretty quickly, or on a shorter term frame, and there's your pop 44.31. Maybe you got a decent number. What do you got for me, Spencer?
Yeah, so the estimate, they're thinking it's going to be a hot one here. So estimates are for a 0.5% increase month over month, a 5.3% increase year over year. Those are estimates. 5.3, somewhere in the 5.3, 5.
People jumping the gun here? We got the data out, man. You must have some good servers here.
Yeah, wow.
Right there, right in line.
5.4%. It was in line. So yeah, it was right there. 5.4% increase year over year versus a 5.3% estimate. And then it was right in line with the month over month growth, 0.5%. So yeah, it was, they thought it'd be a hot one, and it I mean,
food and energy.
5.4% is it's pretty substantial year over year growth, I would say, in prices. Holy moly. That's like a little hard to fathom here.
Yeah. Well, they liked it. Maybe it was the excluding food and energy 0.3 versus 0.4. Who knows about what, how they track it. But the only thing we can look at is we got to pop off the number, and we went green. 38.25 is the high from yesterday. If they love this number, if everything's fine, if the variant's fine, we're going to go up. We're going to hold the 44.30 handle. Go up and take out 44.38.25 and continue. I'm looking. The banks are not really moving off this. They wanted to see a hot number. What do we got? Tech's rallying a little bit. I mean, you got to think too, folks. When there's inflation in stock prices too. But they like the number, and we're lifting strong.
It was 5.4% for overall. If you take away food energy, it's 4.3%, which is
okay.
Still nothing to sneeze at here. Food on its own, food increased 3.4% year over year. Food prices, energy, 23.8% year over year.
38.25. We just got the print, folks. New all-time high, floated right up to that area. 38.5, the current high. So it did it. We got back up there.
If you are wondering what your two biggest increases were year over year, gasoline up 41% year over year, and no surprise here, used cars and trucks up 41% year over year as well. So yeah, I mean, this is so. If CPI, which I've come to believe over the years, inflation is so personal anyway. It depends on where you live and all that stuff. But CPI, has come to probably skew more conservative than reality. I've come to believe that if CPI is saying it's over 5%, then it's probably more like 6-7%.
Yeah, Vegas in here.
It's usually double, so we're really running 10 if it's 5.
I don't know if I would go 10. I don't know if I would say 10.
Well, if you got the airline tickets in there, that's deflationary there. So the airline tickets and TVs hold it down. But
inflation is so personal. It all depends on where you live and what you buy and what you
I don't know. I think housing prices are up everywhere. Has anyone in their own area seen housing prices decline? Chat question: has anyone seen housing prices decline in the last year?
No, but housing prices, generally speaking, don't decline. They just don't go up like they're going up right now.
And in Ontario, year over year, housing prices were up over 30% in 1 year. That's a little bit inflationary because you know what? The majority of a person's expenses is their house cost, and their mortgage payment. So, I mean, we know that inflation's been hot. Joel, good point on the banks. I mean, the TLT, it has come down a little bit here, the TLT. So you're seeing the banks rally just slightly. But when the numbers come close to in line like this, the market doesn't totally know. I think you got a relief rally a little bit in the S&P saying, that this number wasn't just absolutely crazy. You obviously see that also in the Qs. We were trading in the red. We went to the green, but nothing violent. Not a real violent move. We rallied about 6-7 points in the S&P.
Can I just say one thing? I just gave you all year-over-year numbers, though. If you go back and look at July versus June versus May, there is some slowdown happening. Used cars and trucks have slowed down massively. The increase in prices has slowed down massively in the last few months. There is a slowdown. If you look at the last 3-4 months.
Oh, I think so. You've seen lumber even come down. Obviously, we know that, in the futures markets, but we've also seen it in at Home Depot. You've seen lumber prices starting to come back in. So, I mean, you are seeing different, I don't think you're seeing this huge, that we had back in the spring where everybody was just buying everything hand over fist, no matter what the prices were. You have seen definitely a slowdown in the last few months, and hopefully it comes back into some normalcy.
You guys want to hear a little bit about inflation? Car companies are charging $5,000 to $10,000 over sticker prices.
What are you talking? What is that?
Like if you went to go buy a brand new vehicle right now and you get the MSRP, That's what normally you'd pay for. You know, some of us try to get it a little bit lower than that.
Yeah, you get a little normal.
Ballpark.
Guess what? They're putting premiums on that, $5,000 to $10,000 more. You go pay for that.
Wait, you're saying dealerships are
Yes, they're raising the MSRP $5,000 to $10,000 because they just don't have the inventory to sell. And then they're like, well, you know what? We'll just raise the price. I mean, if used cars are going up, we'll just put our new cars up $5,000 or $10,000.
I mean, we know used cars and and used trailers, everything, all the price of that stuff has come up. I didn't know they're charging more than the stickers. That seems insane.
Boom.
But
that's inflation.
But all used car pricing has come up substantially. I mean, and we've seen boats, across the board in the last 6 months to a year. You think, how many people make money on their boat, Mitch? Like they buy a used boat, and all of a sudden, 2 years later, their boat's worth more money. The trailers, people buying those are worth more money. I mean, it's not just inflationary in new goods, so it's a good point. It's inflationary in used goods as well.
All right, we got Christian Fromhertz here, and you know what also decelerated month over month was airline tickets. Anyway, let's get Christian Fromhertz on the hopper here. He is the founder of the Tribeca Trade Group, joining us here on the show this morning. Christian, good morning. I don't know if you saw the number there. Do you have a quick take or no?
Morning, guys. How you doing?
Good. Do you have a take on that number we just got, or not really?
Yeah, I think in line is fine. I think as you guys were mentioning that everybody was expecting a pretty hot number, so I didn't want to see this number go anywhere around like plus 1%. Plus 0.5, fine. And I even thought that the estimates, like, I wonder who makes these surveys or these estimates.
I've wondered that for years.
Because I would have said like 0.7, 0.8 would be what we would be looking for. But hey, 0.5, and you could see the market reacting to it. I'm watching bonds here. I think bonds are going to kind of be a little bit of a clue for the day. But you're seeing NASDAQ as well rally a little bit. I think people were really coming into this print, and we do have PPI tomorrow too. But I think people were kind of a little bit worried about this data coming out, and saw the rotations that we saw on Friday too after the jobs report. So I like this number. I was not expecting it to go lower. I was worried that we would see a print that would come around plus 1%.
Is it fair to say that the Fed apologists and Team Transitory are in good shape right now?
For the time being.
Are in decent shape right now. We've seen
Team Transitory.
Yeah, the CPI is slow. April versus May versus June versus July. It is getting lower.
So, I mean, they can kind of rest a little bit, but I don't think that they're out of the transitory woods yet. I think there's a lot of things that could kind of, just as you guys were talking about car prices and so forth, that has to like chill out. And I think some of these supply issues really have to be, kind of taken care of for some of these prices to stop going up. I could tell you, it's awfully expensive to get a beer in New York City these days too.
Beer prices went up. I know Kramer says he raised his drink prices $2 at his restaurant there.
Yeah, there's a little bit of menu shock.
I didn't know Kramer had a restaurant. Today I learned.
He does.
I'll have to go check it out. All right, Christian, so what are you watching this morning? Besides all that, what are you watching here? Or not even this morning, this week?
Yeah, just kind of seeing the rotations, which I think started on Friday when we had that better than expected jobs report. I thought that we would see that if we got a better than expected jobs report. I thought that we would see some rotation. It's I think it's more, right now we're seeing the growth versus value kind of come back into play. And Dennis, I heard you talking about this morning, kind of the reopening trade. Yeah. I don't know. I think that's still too dicey, the reopening trade. Maybe there's some place here and there, but I think right now the story is more the growth versus value. And, starting to see some things like, which I can share my screen in a second too, but sure. I'm really interested in what the industrials and what the materials are doing. Obviously, the steel stocks were absolutely in fuego yesterday, but I want to see if some of those other areas are going to catch. The financials started to get going too on Friday, and they've had some nice continuation this week. But yeah, I think this market is kind of have to. Or let me try to share my screen.
Sure.
Okay, let's move this over here. But I think, constantly trying to stay one step ahead of this market with the kind of rotations that we're seeing. Let's try this. Let me just move this over here and hit share. And let's see how this works. Share screen.
Make sure you share the right one.
Yeah, I know. Always with these different applications. But you should be seeing my screen now, right?
No, we're still seeing you. Oh, there we go. Now we're getting it.
And your bike, what kind of bike is that?
We got it now.
It is what do I have over there? I have a what is it? Energizer or Specialized.
I don't know what that means, but okay.
A Specialized bike. And Joel, I was up at Saratoga. I don't know if that. I know you're a big horse racing
How
fan.
was that there? How was the crowd there?
Crazy. You want to talk about reopening? Oh my goodness, just crazy.
Wow.
No masks, just party like COVID never happened before.
It's nice to see, actually, like when people can enjoy themselves again. I mean, we've all been locked up, and I do think we're going to get this great reopening. I think Delta just paused it temporarily here, and hopefully we're going to get past this and get this great reopening that we've all been talking about. But what are we looking at? What are we looking?
So we're looking at the industrials chart, and one of the things that I note here is that jumps off the page to me is just the coiling that's been going on here. So when you have when you have three moving averages wrapped around themselves like this, you often see a decent move once we start to kind of break. And I think we're leaning to the upside here for the industrials. So I like this group, and I've been looking for some names, individual names that I like out of here. And I think the group looks pretty attractive. It's been dormant. I also like the materials group, which is a little bit different looking chart, but you could see it's doing something different. Back in June, it started to break down a little bit, and then we had a sideways period for most of July, and now we're starting to see this curl back up, and I like some of the names that are in here, specifically like the chemical names. I like OLN. I like LYB. So I think there's some good opportunities in here. Based on this constant rotation that we're seeing under the hood of the S&P.
What do you think about this headline that we spent 20 minutes talking about this morning, the Southwest Airlines warning, about Delta variant? Do you think that sort of a headline reverberates across markets in the coming days and weeks, or not really?
I think for those groups, I think there's definitely sensitive groups that are going to, be more susceptible to pullbacks. Something like airlines specifically is going to. But just as you guys were alluding to, I think this is another wave of COVID. Maybe I'm being a little bit optimistic here, but I don't think it's going to cause the lockdowns and so forth that we saw before. So I think to use the transitory word that you guys like to use,
everyone drink.
I think that the COVID situation and the waves are transitory.
Okay.
Ooh, applying it to that. What do you think about tech, big tech since earnings? They just great numbers across the board. Google has just been Google. That's inching back up. But, Apple having this consolidation period, I mean, the trend is up, right? So consolidation to blow through that 150. I just wanted to get your take on tech. Not going down, but certainly big tech not going up. What's your take on that?
Yeah, I like tech. It's just one of those situations, and it's the same thing with the software names too. You just have to be careful about chasing some of these names and just kind of, and being patient and waiting for this. So right now I've got an alert set right around 148. I see some resistance around that level in Apple. So I'm waiting for that to trigger. You can see on the 1 hour chart. So I think that it's nice, even though there's not a ton of new features with the new iPhone, but I think you have a little bit of a catalyst there. So that's definitely one name on my radar, given the technical pattern. And
what would you look at? You said 148. Are you looking like something like that? And you mentioned an hourly. You're looking for a couple hourly closes above that, because that's kind of been the top of the trading range.
Yeah, some on the for intraday hourly closes and then for the daily chart as well. So what I've got what's called value areas on my screens, which looks at volume at price. It's a really great volume at price indicator that I use. So yeah, I'm looking for on this 1 hour chart, which is the value area for the week. Notice we tried to get here on the announcement of the iPhone and didn't have enough power to push through. So I think you just have to be patient and wait for this move. Wait for a couple 1 hour bar closes above 147, and then for the day 148. So we're close. I mean, it's really close. But yeah, I like this group. I just think that you can't, like, in my opinion, you don't want to get like too far like into overweight tech if we start to see these rotations happen. But what's nice about this is every time that we do see these rotations into some of the other sectors, what happens is this group becomes a little bit more in demand, and then we see the rotation back into the tech sector. So especially, I like some of the earnings reports that we're getting out of not just the big tech, but just the software names. I mean, this HubSpot was a really good earnings report. I like what's going on in Cloudflare. So I think at this point, like, I'm not going to chase Cloudflare up here, but on dips, like I wouldn't mind if we see the rotation back into cyclicals, because then I can kind of go get a Cloudflare at like 115, which I'm looking. I feel like I missed it. But I think there's a lot of other opportunities in some growth areas. Like Align Technology had earnings about a week ago. So let some of these names kind of come in a little bit, and I think you're going to find some good opportunities. HCNP is one name that I started yesterday too, because you got this little pullback. You got a nice gap up, nice breakout of this wedge pattern, breakout to new highs, gap up on earnings, and it's kind of sitting back here. So that's what I'm looking forward to. Is I actually want a little bit of a rotation out of tech and growth, so that I can kind of catch some of these names that gapped up on earnings. Because as you said, I mean, some of these earnings were phenomenal that we've seen the last couple of weeks.
I mean, and we have seen money coming into the dip, and this buy the dip mentality has been strong. I mean, certain stocks like Amazon maybe weren't bought, but some of these smaller growth names, the dips were absolutely bought. I mean, even Uber, where it was down under $38 right on the headline number, it quickly got bought and rebounded there. So you're seeing, the growth names, or at least the old growth names, a lot of them are getting bought on dips here. And, earnings season gives you those opportunities sometimes. Even Coinbase last night had dipped down to about 262. It's now up at 281. So you've seen a 20-point dip off the earnings lows there. Will you get down and dirty on an earnings report? Like, if you see a company that you like and the report doesn't look as bad to you, will you get down and dirty and pull the trigger on an earnings dip?
No, I tend to look the other way. I'm looking for names that are showing, a gap up on earnings, and then basically, whether or not I want to chase on that day is dependent on.
You're not playing the earnings. You're trying to stay away from them.
Yeah, I'm looking for moves after they report, and I want to follow strength. I think that names that have had these really good quarters, they're going to be the go-to names for the next quarter. So that's really what I get excited about for earnings season, because I do think it's a tough time to swing trade, and I'm more of a swing trader. But really, what I'm looking to do around earnings season, and I try as best as possible to sit on my hands, but I'm looking to see what the next leaders are going to be for the next quarter, and those, once they start to move, I generally look for them to kind of rest, pull back a little bit, like the HCNP, and INMD is another name too that I started yesterday. This is a medical device company that has had good earnings. I've been waiting for the dip for this one. So yeah, that's more or less what I'm looking for. Names that have poor quarters, they're kind of in the penalty box, and they could be in the penalty box for a whole quarter. Like, Amazon, I was really excited about this breakout in Amazon that happened. And, once it got stifled by earnings, and now, look at this thing. It looks like a mess, and it's back into the range. So no, I think that there's better opportunities, in the names that are going to be the leaders for the next 3 months.
What about Fubo? We're going to talk about Fubo today. This report is fascinating, a huge surprise, especially within the context of Netflix and Roku, because their reports were not great. Everything that they said, it was, oh yeah, growth is slowing. Fubo is saying pretty much the exact opposite. Growth is increasing. They raised their guidance. They had a great quarter, and then they raised their sales guidance and their subscriber guidance for the entire year here. And then while they're at it, they filed for a mixed shelf offering. But it was a great quarter for Fubo against trend. What do you think of this one here?
Yeah, and that's 2 in a row for them too, because the last quarter too, so here's a good example. They did report a good quarter back in May, and they had a nice run from about $20 to $30, and they're testing that high. It's tough. I mean, this is a smaller niche play, I think. So I think there's room for that in your portfolio, but I think position size is important because from what I understand is it's a pretty crowded space in terms of the streaming. So, it's fun to have a couple of these names in your portfolio, but it wouldn't be a core position for me. But,
okay.
I think this upstart, and it's already running this morning, but it's pretty amazing when you look at some of these finance companies, these bank, companies that are providing either bank loans or just loans in general. There's now been a couple of these things that have really hit. Lending Club was another one that had a huge monster move on earnings. And, that's a good example of this. Gapped up to 22, 23. It's up to 27. So, I think you could see with this upstart, at least a move to 170. And it's actually happening, so you could tell what's going on here this morning. It's squeezing.
Wow.
So upstart gaps up $30. How do you control your risk on a play like that? So let's just say, you like it, you think it's going to be a gap and go. Do you buy it on the first day? Because the way I look at it is like, boom, it's up 30. I don't know how to control my risk on that because where am I stopping myself out? Just set us up, if you're liking the quarter and you think you want to participate in a potential gap and go trade, how do you set up the risk reward on something like that?
I think it's like any trade, right? To plan out where your stop price is, and of course, it's tough. It's mentally tough to say, "Oh, geez, the stock's up, $20. How am I going to play this?" And I think as long as you define your stop, and I talked about this, I send out videos at the end of the day, free videos on Twitter, and one of the things I specifically talked about this one, and I said that you could set your stop to 155. Of course, you have some overnight risk if you wanted to purchase thing in the after hours, but you knew that the brokers were going to come in and upgrade this and increase their price targets. Their results were just too strong. So I think 155, and when I said this, it was kind of right around here. Now it's kind of taking off, but now at this point, as long as you're defining where to get out of this thing, and now I would kind of bump that up to maybe 160 here. And maybe take a target at 170 because there's a level that I've got here, which is a virgin point of control. So an area of heavy volume where buyers and sellers have previously met up. So that would be a place to take a target and then see if this thing can push through to new highs.
Is upstart? Oh yeah, it did trade up to that area. I mean, 165. I mean, it broke out. Boy, that's a good setup. I don't know. To me, like 165, it takes out 165. That's just based on the short-term chart. But, well, Christian, great information today. We really appreciate you coming on.
Always a pleasure, guys.
Christian's handle is up on the screen at Fromhertz. Great follow on Twitter. Thanks a lot, Christian.
Thanks, guys. Have a great day.
All right, and have fun on that bike. It is 8:54. There's a bunch of tickers flying in the chat. I've been trying to keep up. There was more earnings we didn't get to. We didn't talk about Unity. Upstart is going on its earnings report. Let's see. We didn't talk about WW, which is one of, if not your big loser of the morning on their earnings report. Wix.com is down big today on their earnings report. Oh man, where do we?
You're seeing the growth tech. It just continues to get bought when there's an earnings dip. Unity Software, same thing last night. It dipped down on the report. How low did we get, Joel? I thought I saw 104 on you.
Let me see.
We got.
And you know what? You turn around and they just
102.
102.
Wow.
And I mean, Coinbase was the same thing last night. I know Christian, he's a little maybe more conservative because he doesn't like to trade the actual, the dips on the earnings. Like, I just think, sometimes you get that earnings dip, but it's, a misinterpretation. I'm all about, and I'm a different style too, but I get down dirty sometimes in the earnings reports as well. I always lower my size if I'm doing that because obviously, there's more risk involved. But, if you're looking at a stock like Etsy, I bought it on the dip. It's a stock that's been in favor. It's just the type of market that we're in right now. It's like, you got to identify, we're in this buy the dip mentality. We're not in the buy the dip on WW. We're in the buy the dip on growth names. It's a growthy market right now. And Christian does such a great job identifying what type of market we're in. And he's looking to upstarts and stuff because he's realizing, growth is back in favor, at least in the short term it has been, at least in the last month. So, when you get the dip on the growth name, that's the kind of dip that gets bought, and that's why, I did buy the Etsy and I did buy the Uber dips because I felt like those were two dips that would get bought. I'd not buy the Amazon dip. I own Amazon in the long term. That's not a growth name, though. Amazon, you can think of it as a growth name, but it's not really. It's a cash cow, mega cap name. So, I mean, there is opportunity sometimes, and sometimes you can really get your head ripped off doing that too. So I'm not suggesting new traders to come in on buy every dip on every, earning stock, because some of these dips do have follow through. But we're in the type of market right now where it seems like you're being rewarded if you're taking that little bit of excessive risk and you get a good name that's dipping, like Coinbase or you last night. It was an opportunity. I wish I would have bought those.
Coinbase, now the CFO comes on, the old CFO pump on CNBC, and you did get you got the move up over 280. The fact you got how high did you get? You get to 282.85, and then the 2-day high is 82.43, back under 280 now. I mean, there's the battle zone. That's the bulls. You clearly got to clear out that seller, 280 to 282. And it looks kind of open and wide open on that. I'm not going to say 300, but you could see on the daily chart when it came back down hard through 300, big psychological number. Market still still holding up, made a new all-time high at 44.39 and just hanging out here. It looks like we're bid near all-time highs for the session.
I'd be curious your thoughts on the growth front. I'd be curious your thoughts on the ARKK, because that was for so long was not for so long, but for a period of time,
been out of favor.
Was the proxy for growth.
Yeah.
Favor, ARK in favor. ARKK, not in favor, but I don't really know, actually.
It's kind of at a crossroads here. And I mean, yesterday's tape was telling you maybe some of the money's going to come out of the growth names and move back into the reopening. Then today we're getting a complete reversal of that, where some of the growth names are popping the reopening trades thanks to LUV or not. You look at ARKK, from a valuation perspective, she likes buying everything that's high growth. So, I mean, your risk is always going to be higher on ARKK, because she's buying the high growth names. But when growth comes back into favor, ARKK is going to outperform. When growth comes out of favor, it's going to underperform. So you're on like a leveraged growth play when you're buying ARKK, and that can work. And I've always challenged some of these valuations that she pays for stuff. Growth at any cost. So that's why I personally don't own any ARKK, because I don't like the growth at any cost. I tried that style back in the year 1998, 1999, 2000. It worked well for a few years. And then the tech bubble burst, and I was like, I'll never pay ridiculous valuations for companies again, just because I got punished for doing that. But it's growth at any cost has been working for a while, and maybe it continues to work for a long time. We don't know. I don't think we're in an imminent crash situation. But, I'm just a more conservative investor than Kathy would.
Brick wall at 125.5. I mean, you can show it last three highs surrounded by that area. So, and now we're $2.50 away from us. So if you're looking for ARKK to rip up to 130, boy, you got to clear out that seller at 125.
One more quick. Let's do CTVA, Corteva Chemicals play. Let's do
CTVA. Going off the board on us here.
I haven't traded this one in a long time.
Flat CTVA. What's the skinny on it?
They had earnings last week. Earnings were good. They
gap and go. Christian Fromhertz, little gap and go here.
CVTA?
No, okay. CTVA.
That's the dyslexia, Joel.
Yeah, I don't see it. I don't. Show me what you can do here. It looks like 46.25. That's all it's out there. Boom. She came up shy last couple days. Big resistance there. But all right, I'll let you guys finish it up. We got a lot of tickers here to cover on Pre-Market Prep Plus, so I'm going to hop over and see you guys all at 1. That'd be you, Dennis, Spencer, and Mitch. See you guys later.
For a meeting that we're going to forget about. Anyway, there was a bunch of tickers in the chat that we didn't catch. Quick question for one that I guess, Dennis, maybe you can address real fast, and I think I know the answer. It was asked about, do you guys use time frame continuity as part of your trading, which I think is part of the strategy, and so I'm going to say
what do you mean by that? Do you you do using the same time frames for all trading? Like what is that?
No, time frame continuity is like a specific I don't want to call it. Do I want to call it an indicator? Is that what it is? I guess it's an indicator. Yeah, there are indicators that sort of embody that. So I don't think you guys use that to answer.
See, I don't use hardly any indicators in my technical analysis. I use a 90-day chart. So and you know what, we're gonna do obviously our training seminar there on the 21st. I got the date right.
You do?
I can't even get the dates right. You know, and if I teach technical analysis, I teach technical analysis in 3 minutes. My entire book on technical analysis would be like 4 pages. A majority of my trading is relationship-based trading. I buy certain stocks because other stocks are doing certain things. I like to look. That's why I love this reopening and this Qs. It's all relationship-based, and you know, it's quantitative approach to the markets more than anything. From a charting perspective, support. I'll teach my whole technical analysis in the next minute. You're gonna do it in 10 seconds. Support, resistance, trends. That's it. Support, resistance, and trends, and that's it. I don't use any moving averages. I don't use any indicators. We do like the little, when they make a little double bottom or double top, which means 2 consecutive highs or 2 consecutive lows as an area for a potential reversal of a trade. But for the most part, support, resistance, and trend. Stocks trending up, I'm buying dips. Stocks trending down, I'm selling rips. And that's pretty much how I do it. And then, you know, they might break out. You know, if it starts to break out through that trend line, then I look, you know, that, okay, maybe this is going to be a reversal of trend. But support, resistance, and trends is 90% of technical analysis.
All right. Thanks a lot, Dennis. We will talk to you later.
Good luck, everyone.
I know the thing at 1 o'clock, that was just Joel talking to Dennis and I to plan out the Saturday event. Neil will be back today on Get Technical. So here's the schedule for today. Since I have you all here, we got us. I'll probably hang out with you guys for about 10 minutes or so. We're going to do live trading with Benzinga, myself, Mitch, Ryan Fluna, starting at 9:15. At 10, we'll go until 10:30. At 10:30, David Green will hop on. David and I will hang out until 11. SPACs Attack today at 11. Power Hour at noon. Get Technical with Neil at 1. Moon or Bust at 2. First Trade at 3. Joel and I back at 3:30 for the At the Close show. How to Trade with Benzinga Pro at 4 o'clock with Mike Rao. Penny Lane at 5. We're doing a brand new test show later today at 6, which I will let I'll let that one hang there. I'll let that one linger there. I'm not going to tell you too much about that. And then Aftermarket Therapy at 7 o'clock tonight. I also want to mention we're doing a replay tonight at 6:30. If you missed yesterday, a great interview on our new show, The Roadmap. It is set to replay at 6:30. If you're into NFTs, guys, check out The Roadmap. It airs weekly. It aired yesterday at 3 o'clock. We're going to do a replay tonight at 6:30 of that show. It's about a half-hour show. So excited. It was a fantastic interview. We talked all about a little bit about Doge, a lot about new NFT projects, and it was great stuff. So that'll be at 6:30 tonight, that replay. Okay, I know there's a lot of tickers that we did not cover. And I forget who it was now. I don't write down who mentions what in the chat, but it was a great point, whoever it was that mentioned Fubo. Because Fubo does have a rather high short interest, which I think is worth pointing out here. So I'm going to pull up my Benzinga Pro. I'm actually going to go to the Pro Beta tool. If you have Benzinga Pro, you can go to Pro Beta, PROBETA, probeta.benzinga.com, log in to your Benzinga Pro account and check out the beta platform. It's where we test new features. We have short interest data in there. So on Fubo, you can see 21% of the float is currently sold short. A float of 130 million shares, 23% of those shares are sold short. So pretty substantial. That's not like astronomical, but it certainly is high. 21% float is sold shares sold short of Fubo. So you've got that, and at the same time, you've got this. I don't like this. Let's go here. You've got that crazy earnings report, that great quarter, and I didn't even mention this. If you saw the headline, which I'm sure you did, if you're following the story, they're opening up a sports book. So you got a couple wins at Fubo's back here this morning. This one could rip higher for sure. It's been out of favor. You know, we know what it can do in the past. It got to $60 last year. We know what it can do. Let's see what it does here. But this is a very interesting. Whoops. 1 second. This is a very interesting setup this morning in Fubo. Multiple tailwinds. And then ACI, yeah, oh my goodness, guys, this must be an inflation play, right? This thing is going parabolic. ACI is going parabolic here. Albertsons, Kroger is doing okay, doing well. I mean, not okay, it's doing well. It's not quite going parabolic, but if you zoom way out here on Kroger, it's having a great year. This would seem to be just, we talked about growth being back in favor. Seems like there's two things. There's growth, and on the other hand of the spectrum, on the other side of the spectrum, you have like staples, right? I mean, what is ACI if not a consumer staples company? And I already looked. This is not a short squeeze, not an especially high short interest or anything like that. This is just good old fashioned inflation. It upgrades from upgrade, Chris Smith. Honestly, that like one upgrade is not going to do this. It's not going to do that on a grocery chain, in my opinion. Here, I had not been watching this though. So whoever brought up ACI, whoever was mentioning it in chat, great call out, because that's huge. That's huge. So okay, and then I know there's a bunch I missed. Wendy's, didn't they report? I think Wendy's is this week. I may have missed it. I apologize. Let me scroll here. There's a few more tickers I wrote down. Oh, public service announcement, guys, and I always write down upcoming events just so I have them on my radar. Upcoming events that I think will be catalysts for stocks. Like I don't write down CPI because I know that I'll know about CPI on that day, but I will write down any big corporate events that I think are important. August 19th, okay? If you're in Tesla, if you're trading Tesla stock or options, whatever, August 19th, Tesla's AI day. That's next week, okay? So if you're in Tesla, especially if you're in options, have next Thursday on your radar, because that could be a catalyst. I'm always writing down dates that I think could be news catalysts. August 19th is one for Tesla. So just write that down. Workhorse. Yeah, food inflation. Exactly. That would seem logical to me, right? Workhorse. I haven't looked at Workhorse I have, but I don't really remember what it's doing. Is this? I don't know how high the short interest is, and let's go look here. I don't think it's especially high. Oh, well, I stand corrected. 35% of the float is sold short. That is significant. Now, that doesn't mean not every stock with a high short interest has to squeeze to the moon, right? To everyone who's short this thing, though, I mean, I guess you could. What are you trying to write it down to like 5 or 4 or 3? It's already fallen by 75%. But no, that does not mean there has to be a squeeze just because there's a high short interest. So I would caution against that for sure. I know there's a bunch of stocks we didn't get to this morning. Earnings. I know there's 100 a day. So how about SoFi? Stop asking me about SoFi. Oh, okay. What is it doing? Is it doing anything? Okay, it's had a good week or so. I'm long from 20 and change. When do they report? Hey, look, it says it right here. Call tomorrow. Oh, you know what we didn't talk about this morning? We didn't talk about AMC. Guys, this is concerning. Seriously, and I'm not messing around. Like yesterday's tape was concerning. That was such an excitable, such a bullish conference call. They were leaning into all the retail investors, the power to the people. We're taking Bitcoin. We're talking to sports leagues. Maybe we're doing a thing with GameStop. Who the hell knows? It was such an excitable call, and there were things not to like for sure. I mean, if you don't believe in theaters, then why would you like the fact that they're buying more theaters? I mean, their attendance, frankly, is not even close to where it was pre-COVID. But I mean, it was a rah kind of call, and they could not even hold those gains for a day. That's not what you want to see. Not what you want to see at all. Seriously, this is concerning. It's been in a downtrend. Everyone who's hodling, I hope it works out for you, but have some stops or mental stops, please, because it doesn't look great. I mean, I said that up here too, right? I said that in June, and we had that rip higher. This thing is liable to rip higher, 20, 30, 40% on any given day or any given week. It probably will, actually. It'll probably go back to 50 at some point. But is it going to go back up here? Is it going to get back to 60 or 70 or got to 72 before? I just don't know. Doesn't look good, right? Doesn't look good. Am I being too nice? Maybe I am being too nice. Doesn't look good. That's all I'll say. Doesn't look good. Okay. Again, that Pro Beta site that I mentioned, if you are a Benzinga Pro user, it's literally, there's the, let me just I'll put the URL on the screen. If you have Benzinga Pro, you want to check out where we test our new stuff, new features, probeta.benzinga.com. Link on the screen. There it is. Check it out. As far as the link to the pre-market prep Saturday special, that's what I'm calling it. Joel, Dennis's boss will be there. Rob Friesen, Mitch will be there. I would be there, but I have a wedding on that day in upstate New York, so I'll be out. But the link to that is in the description. You can also just go to premarketprep.com to find out more about that. Yeah, and so just to give you guys a better idea of what will happen there, it'll be 3 hours. I think maybe they're going to go longer. I mean, they'll probably go longer. Let's be honest. They're probably going to go longer. It'll be 3 hours. It'll be basically Joel and Dennis and Rob are all going to walk through their trading strategies pretty in depth. They're going to walk through their morning routine. What do they do every single morning when they wake up and sit down on their computer, right? Like what do they look at? What charts? What news? Whatever. They're going to walk through exactly how they approach the market every single day. They're going to talk about prop trading, how to do that. That's why Rob is there. They're going to talk about the strategies that they use, and they're going to allocate a substantial. This is what I told them. I told them to allocate a substantial amount of time to Q&A. So there will be a large portion devoted to just question answer. Again, link in description. That's all I got. Okay, I think the live trading with Benzinga Pro is going live here in a couple of minutes. So with that being said, thanks to our guest today, Christian Fromhertz. Please remember all the information from our show. Let's get that banner off. All the information from our show is meant to be used as informational purposes, not for investing or trading advice. Please, as always, do your own. Oh, look at that. My background changed. Do your own research. It's great to get ideas from other people, but please always do your own DD. I think that goes without saying, but we don't say that enough. Yeah, smash the like. How many likes were we at here? 375? Is that right? 377 now. Let's get me to 400. Let's go. We're right there. I don't want to hop off until we get to 400 on the button, and then I will leave, and then the stream will end, and then it will redirect to live trading with Mitch, Ryan, myself, and then David Green at 10:30. Did we get to 4? We did get to 4. Okay. Thank you very much. My work here is done. I'll see you guys over on the next stream, and we'll do some live trading. Bye.